We found an unusual trade worth $68 million on EQT Corporation Stock, ticker symbol EQT, that happened on the last trading day, January 17th, hitting new highs just recently. And so it is very overbought now, according to technical analysis. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying EQT or bearish and selling EQT, so that we can also make the same financial decision to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis of EQT Corporation Stock, which could be a potential trade opportunity here, even though it is currently at a higher risk level in comparison to our membership trades. Now, having said that, it is worth noting that EQT stock was one of our past membership trades back on October 3rd, when the stock was trading at about $37 a share. And so if you were one of our members back then and bought the stock after we shared our analysis as to why we were going long bullish, you can see that you would be at a gain of about 41% now, just buying the stock. But we use options for leverage, so we gained even more. And on November 18th, we had already made more than 100% profit and started to manage our risk by locking in profits and rolling our options. And you can see that this was good trade management because the stock never quite went up more towards the end of the year. It just traded in this range. You can see that back then on October 3rd, when we shared this video with our members only, letting them know that we are going long bullish on EQT when the stock was trading at about $37 a share. And then we shared this video on November 18th for our gold level members when we started to manage this trade when the stock hit new highs. And so we had locked in of about 129% profit, which in hindsight now was a good idea because the stock never quite moved up any higher towards the end of the year. And so if you want to learn more about our membership and how you can gain access to better trade ideas and better option strategies to reduce your risk while increasing your probability of profit, we'll put a link to our website up here, because as we mentioned, this new trade in EQT is a lot higher risk now in comparison to the trades that we share with our membership. And diversifying our portfolio is very important because not all of these unusual trades will be profitable. Some of them will be a loss. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, for the new trade in EQT, we can see here on the options time and sales tape on January 17th at the same time at 9:48. At the 4-second mark, these options trades were being done. For the February 21st options at the 50 strike calls, 23,738 contracts, and the February 21st 44 strike puts, 11,869 contracts. We also have another expiration cycle for the March 21st options at the 55 strike calls, 19,941. But notice over here, this is the same option, 55 strike calls, March 21st for 8,511. And so we need to add these two up together so that we know the total number of contracts that was actually being traded for these call options in order to get a better picture as to what this wealthy investor was doing. And you can see here that this is a total of 28,452 contracts. And lastly, we also had these 48 strike puts being traded for the March 21st options, 14,224 contracts. So remember that number because we will be using that data for our analysis later. Now, if we take a deeper look at the option chain to find out more about these unusual options that expire February 21st, we can see here that at the 44 strike puts, we have an open interest of 12,500, which is greater than the number of put options that were being traded at the volume. And so based on our analysis, these trades were closing trades, as well as the 50 strike calls here. You can see an open interest of 29,218, greater than the volume of 25,000. And so both of these options for the February 21st expiration cycle were closing trades. And what this wealthy investor was doing was rolling to the March 21st options. We can see here that at the 48 strike puts, we have a volume of 14,000, greater than the open interest of just 775. And at the 55 strike calls, 33,000, volume being traded, also much greater than the open interest of just 11,000 contracts. So we know that both of these unusual options are the new opening trades, because remember, we need to make sure that we are not following closing trades. And that is what a lot of other websites or scanners get wrong when they report unusual option activity. They do not spend the time to analyze what exactly is going on with every single option that is being traded by these wealthy investors. And so based on our analysis, this wealthy investor was selling the 48 strike puts to open and buying the 55 strike calls to open. And so when we analyze this trade, we can see here on the risk profile profit loss graph where the share price is represented on the x-axis here, and the stock is currently trading here at $53 a share, and the y-axis shows the profit loss. Note the zero break even line here, and so when the lines are below it, it is a negative loss. If it is above it, it is a positive gain, because this is a long bullish trade, and we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. And keep in mind, this trade is hedged. You can see this blue line is flat, or they will not be at a loss at expiration all the way to the $48 share price, because they sold the 48 strike puts, selling cash secured puts, which means they are willing to own 100 shares at this strike price of 48. And so each contract required $4,800 of buying power to sell those puts. And since we know there was a total of 14,224 contracts that we highlighted earlier, we multiply that out and we get a total of $68 million for this trade to be placed. And so quite a significant amount. But remember, this wealthy investor will not be at much of a loss even if the stock goes down. And so the way we traded this is, instead of selling those 48 strike puts where it requires $4,800 of buying power, you can see here that we simply just bought the 55 strike calls. Our position here, POS stands for position, green means buy, where we use position sizing to manage our risk by buying these call options. And so when we analyze this trade, you can see here that it is also a long bullish trade. If you take a look at the Greeks here, we have a positive delta trade. But be aware of the risk on this trade. We have a negative theta of negative 2.5 per trade. And so these single call options will decay in value, and that is why this purple line, which represents the current date, drops down below that zero break-even line. And so the stock has to continue to move up all the way here for those call options to be profitable by the expiration date, which is represented by the blue line. That is about $57.34, even though these call options were at the 55 strike. And so be very aware of the risk trading these single call options. And that is why we typically set up our own option strategies when we trade on the stocks that have a higher probability of profit. If you want access to those, we'll put a link to our website at the top here where you can learn more about our trading strategies, Let us know in the comments below. Do you think EQT stock will continue to go much higher even though it is very overbought now at new highs? Or do you think it will crash down, especially since we have a higher risk earnings event coming up? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.